Nasdaq out with quarterly results. Earnings coming in at 79 cents a share. That was 2 cents better than the street was expecting. Revenue of $1.24 billion was just ahead of expectations. And joining us right now to talk about the first quarter earnings results out this morning, also the markets, the deals landscape, and much more, is Adena Friedman. Of course, she is Nasdaq CEO and chair. And Adena, welcome.
Great to be here.
We're digging through every one of the results that we get this season, trying to figure out what it can tell us about the economy, how people are feeling in terms of business confidence, too. These are very strong numbers. What are you seeing right now?
Yeah, so we're really proud of the results we've been able to deliver this quarter. We had 12.5% overall revenue growth, and each of our divisions grew double digits in the quarter. And so some highlights there are our index business continues to be a great grower for us at 26% growth, and we had $27 billion of inflows in the quarter. And then if we look at our fintech division, we had 10% growth. And as we like to talk about our anti-financial crime business here, and we had 21% growth in our anti-financial crime business in the quarter. And then our markets business really had a record quarter, and we had a lot, record volumes within the quarter, and so we had 19% growth in our markets business. So it's really been quite a period of time. And I also would say that, in these types of economic cycles, our clients really do turn to us. We are a great partner to them, and I think that really showed up in the results of the quarter.
What do you mean by in these type of economic cycles? Because people look at the first quarter numbers and say, okay, what can you tell us about the guidance about how business is going to look this year?
Yeah, I mean, a big part of it is we had a lot of uncertainty in the economy.
Still do.
It really came into the year with a really strong backdrop in the economy and a lot of resilience in the economy, but then had more uncertainty evolve throughout the quarter. And that resulted in volatility in the markets. It resulted in a lot of changes in market values. But at the same time, what happens in that environment is that our clients really turn to us. Number one, as a market operator, we want to be the first market that our clients come to in terms of being able to manage their volumes and their needs in the markets. And I think that 19% growth showed that we were the market of choice. I think then in terms of our index businesses, even with changes in market values, we had $27 billion of inflows, and half of those inflows were in Nasdaq 100 index products, but half of them were in other indexes that we provide in the market. And then I think in the fintech division, where it's really, we are the mission critical technology that really drives markets and drives the financial system. I'll give an example of that is, our Calypso platform provides collateral management. Mm-hmm. And if you think about the need for our clients to move collateral very quickly around the world and be very, very thoughtful in how to manage that risk, they turn to us for things like that. And so we're really excited about being able to be that partner to them.
So volatility is good for your business in the short term. Longer term, I wonder what it means, because there is a real shift in business sentiment. A lot of CEOs who are expressing concern and uncertainty about the future. What does that mean longer term when it comes to IPO listings, when it comes to what else you're going to be hearing from your customers?
So I've been at Nasdaq for a lot of different economic cycles, and I can tell you that, first of all, we are an incredibly resilient business as a business. But what generally happens in times of disruption, economic disruption, is we actually see, as we've talked about, more volatility in the markets. We see a lot of shifts in capital flows, and those things really accrue to our strengths and what we can provide to our clients, and we become like that ballast for them in the rougher waters. I think over a long period of time, if we were to see us move into a more of an extended recession, it changes some behaviors a little differently. But right now we're dealing with really, frankly, a strong ballast, strong start to the year. Like our economy came into the year very,
it didn't get weaker.
I think that as we've gone through the year, it's obviously become more uncertain. It's become more volatile. It's become more dynamic. But generally speaking, when that happens, investors really want to make sure that they have a place where they can express themselves, and I think that we've been able to demonstrate that we are that place.
How do you think about the future, and this is maybe less about Nasdaq per se, but you're connected in so many different ways, to the future of capital flows? And I ask because, you're hearing news out of the FT and other places that China, for example, their sovereign wealth funds will not be investing in venture capital firms in the U.S., in private equity firms in the U.S. It raises questions, actually, whether Canada, which has a whole number of sovereign wealth funds and pension funds, the teachers, are ultimately going to be investing in the U.S., or maybe they're going to hold back. You could think about Norway and other parts of Europe. You could get into other parts of Asia. Meaning, depending on how this whole tariff story plays out, how do you see that play out to the extent it matters to you in terms of private markets and everything and private credit?
Well, I think, first of all, capital always flows where the returns are. And so I think that we have to reflect on the fact that, number one, investors are incredibly adaptive, and they'll adapt to the environment that they're operating in. And we saw that in terms of the capital flows that occurred across the world throughout the quarter and in April as well. In terms of looking into the future, at the end of the day, it's our job as corporate America to deliver returns. And I think that if we can continue to show that the American economy, American technology, and the companies that underpin our country, are the place where their returns.
People always put their money where the returns are, and there are lots of folks, including, by the way, we talked about blue states and red states in this country, where pension funds have decided to put money in different things that have almost nothing to do with returns themselves, but have to do with politics. And so the idea that the Chinese or the Canadians or whomever might say, you know what, will we give up a little bit on this, on returns out of the U.S. for whatever, using it as a chess piece in a larger game? Maybe so.
Well, I think in general what we've seen is that investors ultimately, and including asset owners, asset managers, they are fiduciaries to their ultimate pensioners or their ultimate shareholders or ultimate LPs. And so therefore they're going to drive, in the long run, they'll drive towards returns.
Maybe in 10 years. But I'm saying that it's not an immediate utopia always.
But at the end of the day, what our job here at Nasdaq is to make sure that regardless of how capital flows are going, that they can express themselves. And so I'll give you an example. In the first 10 days of April, we had 5 of the 6 top trading days in equities, 4 of the 6 top trading days in options ever in the industry's history. And on one of the days, we had incredible message traffic throughout that period of time. But on our peak day, we had over 550 billion messages flow through our systems. So what our job is to make sure that we're here to provide infrastructure and the ballast to the economy to make it so that the financial system works. At the end of the day, investors will make those decisions, I think, ultimately based on returns, because that is what they are fiduciary to their own LPs.
Adena, you at the NASDAQ have a great record compared to the NYSE, just in terms of kind of beating them up on the listings that you steal from them, the win ratio that you have on all these things. And that's been consistent for quite a while. But you also announced last month that you're expanding in Texas, that you're going to be putting an additional headquarters there and bringing in some business. And I have to think that that is a reaction to the Texas Stock Exchange, which is going to be launching in less than a year's time. They have big funding from Schwab, Fortress, BlackRock, Citadel. What's the competition? What's the competitive landscape going to look like? How's it changing, and how do you gear up for that?
Well, actually, we have 700 clients in Texas, of which 200 are listed companies. And so we have actually a very big presence in Texas with our clients. So our decision to launch a regional headquarters there is more a reflection of, frankly, the growth and expansion of our business in Texas. Especially with all of the technology assets we now have and we can offer to banks, brokers, investors there. So really, really excited about what we can do to expand our business in Texas. In terms of the listed market, we have these great listed companies in Texas. They get the benefit of having us have a local presence and an expanded local presence in Texas as we launch our regional headquarters, but also have access to a global market, global investors. Obviously, all the assets we have here and all the branding assets are index products that really accrue to their benefit as well. So we have a very unique value proposition to offer any company that wants to list here at NASDAQ, and at the same time making sure we can continue and expand our presence there in Texas to serve our clientele. Our broad-based clientele there is actually really a great testament to the strength of Texas, but it's also a great testament to the growth of our business, too.